Boom, boom. We got the live now. I gotta turn on my light too. Turn this down all the way. I'm gonna plug it in. Why not? Oh, that's that. Oh, I got this. I'm live. Sweet. I'm gonna turn on our do not disturb. Wow, there's already a thumbs up. Morning, Joe. Thank you, Joe. I gotta waiting on me. We're gonna go live chat. Hopefully the video starts. Jesus, why isn't the video starting? There we go. I guess I'm back up. Okay. Turn that puppy on. Let me see. We'll turn ourselves a little warmer. That's a little better. Okay, and I can turn on Do Not Disturb today. I don't have sick dogs. I don't have screaming teenagers coming for Taylor Swift concert. I don't have a lot. And I want to see how it sounds. It's a little better. Okay. Okay, and I can turn on Do Not Disturb today. Sweet, I sound good. Well, as good as this old voice is going to take me. I was looking at a lot of stuff. Look at that XLY. This is my the core portfolio that I have. I probably should add XLK in here. There's a lot of movers today. We're going to do a market scan. Oh, I guess it saved that. We're going to have to brokerage holdings. By the way, should anyone care, I've got the live stock chart of Pepe coin. Pepe? I don't know how you say it. It's a meme coin. And had you bought around this time when it kind of started to blow up, could have turned $3,000 into $3 million by Pepe coin. VTRS had a cross up. I'll put it in there. Why not? Core investments. Let's see. Cleveland Cliffs, CLF, Moderna. Moderna had a cross. Uber. I have Uber. It's but you know what? Here's the thing. Watch this, Joe. Go to the strategy tester. We'll go to the 4-hour algorithm and we'll run it. And we'll look at Uber. If you got in, I always talk about the button hook. And so here's the 4-hour algorithm that we have. Back here, I mean, it was clear when it crossed the 200-day, it got to under 30. You could have waited, I mean, for it, to go down to 22 or to cover this gap. I kind of went over this gap down here at 26 and 27. But if you were a little bit more daring than I was, because I was waiting for that, you've now got 20%. I mean, it's going to open up at about $36. Yeah, that's a crazy I mean, listen, when I put these swing kind of prices in, I mean, obviously, listen, I'm no genius. I'm just kind of guessing. I'm giving people an easy way. And that's kind of the point of the podcast, is try and make sure that people understand an easy way to look at stocks. It's not, an analysis. It's not a huge, hey, here's their earnings. Here's where they can go, blah, blah, blah. It's a swing. Hey, under 30, you can buy it. Over 30, if you want to sell it, you can sell it. It's a good option. But it worked out perfectly on that one that, hey, you got 20%. And in my mind, I think you hold on to it until you lose confirmation. This $32 buy, even at 35, I think this is a $40 stock. They announced that they will be gap cash flow positive this year. So it's a $40 stock. So you buy it at 35, you still have almost 20%, but it's up 9.04% just today. It'll do well. It'll do really well, I think. Listen, I had to drive teenage girls to the Taylor Swift concert, and the amount of Ubers and Lyfts, and it's back. And in fact, on CNBC, they were asking him about the CEO about airport trips. And he said airport trips are way up. Energy, man. Energy just ain't going anywhere. Freaking energy. I should talk about XOM. I'll talk about it when I go over this stuff. MRO had a cross up. Levered ETFs. Wow. We're in for a this is ultra mid cap, just crossed up. This is high beta bull of what? HIPL. Daily S&P. 3 times. There's GDC, by the way. 3 times S&P daily. Your TY is the Ultra Pro Russell 2000. The Ultra Dow. All of those have had cross-ups. Wow. Let's see about Vanguard. Anything within Vanguard? So Joe, you'll laugh having teenage girls. I had a friend whose 17 or 18-year-old daughter wanted to go see Taylor Swift, and they live in Orlando, and so he called me and said, "Hey, she can get tickets in Atlanta. Can she come up?" I said, "Yeah." And I had to fly home from New Jersey to Atlanta in order to host her. And then I get a call from my dad that the dogs are sick and blah, blah, blah. So we almost canceled it, but I'm glad we didn't. VO, RSP, VB, VTV, VIG, VSS. I'm going to move these. I'm going to move these. Vanguard's funds. VIG is the one that I want to. This is the growth one. Dividend appreciation. That's one that's got to, I mean, that's a crazy good chart. I mean, It's not a huge move. I mean, it looks like a huge move, but it's not a huge move. It's just dividend appreciation. So if they get into this if they appreciate their dividend. So it's been going well. Let's see spider sectors. XLY, which we have in our portfolio, and XLI. Industrials. Industrials at 100. It's not a great chart, but for an entry, if you're into industrials, it's not a bad one. Let's look at my personal watch list, which I don't give people access to because it is too crazy. Ring Central. I have a buddy that works for a competitor. I will not put you into Ring Central. Delta Airlines. Interesting chart. CEIX. Let me look at CEIX. It's up 4%, 62. It's a good looking chart for an energy company. Let's see. Console Energy. I think you asked me about this one before. Yeah, crazy good dividend, 7.32. Year to date, it's down 7.51%. My expectation for all of energy is we'll see that kind of flatten out this year. They haven't been covered. There hasn't been, any coverage of them. I mean, they've only got a market cap of 2 billion. That's tiny. That's a micro cap. Sales in March at 64. Sales at 78. My guess is you're capped around 70. The average target price is 79. At 62, they have a P of 4. The problem you have with most energy, Joe, just so you know, is last year was such a good year with oil. This is in thermal coal. And coal price, I mean, coal it soared last year. Just crazy prices on coal. I know they're probably good on earnings and stuff like that. And coal, I mean, nobody wants to get into coal, so the current coal producers will probably make a ton. But if I'm looking at the 52-week range between 39 and 72, as I close closer to 70, I'm kind of looking to maybe trim. When's their ex-dividend date? They must have announced their ex-dividend date is usually after earnings, so it's got to be soon. But great trade on that one if you're up. Good looking company if they killed it too. Lemonade. God, I was in that one for a while. I think I sold out for a loss. DraftKings has been killing it. Just killing it. Your boy sold out here. But excuse me. Excuse me. Sorry. I wound up selling at like 11, but I had purchase price at like 40, so I wrote off against. It was a tax loss harvest. But that's an interesting one. I'm going to bring that up. AI. Baba has a cross up. Deer, which is a chart that getting killed. What's their PE now? It's an industrial. Down 10% year to date. For an industrial to have a here. Let's look at market cap and let's look at the PE of the big boys. UPS at 14.26. So maybe Deere isn't. Here's Deere with 14. General Electric at 14. Well, it's kind of right there in the middle, it seems like TRI, PE of 46. Waste Management, PE of 30. Interesting. I'll bring it up. Why not? Deere. Maybe we're having a turnaround of industrials. DocuSign. God, I love this company. Just, it's so expensive. Down 42% for 1 year, down 10% year to date. Price to sales, not bad, 3.93. I think what you can hope at is that they get bought out. Downgrade 58 to 48. We'll be right back. I gotta go blow my nose. Did I just see a ticker right? GPC? Hold on one second. I don't know if I saw this right. Did I just see a ticker right? GPC. I guess I did see it right. Genuine Parts and Company. Oh, I thought that was. Hold on one second. GDC. That's what I thought. I thought it was GDC. No, I thought GDC went up to 178. No, it's at 18. It closed at 31. That's right. I was looking at Active Trader Pro. So, Docu. I'll put Docu up here. And then I think that's it. Do I want Chewy? Chewy's a falling knife. Nah. We'll go to the ARC funds, which is going to have quite a few, I would guess. The overall portfolio is looking down. Apple is up slightly, Microsoft up slightly, Pepsi up slightly, Qualcomm up slightly, Tesla up slightly, and Uber up big. DraftKings, Fate, Spotify. Boy, that's been a good stock. I have been completely wrong on Spotify. You know what? SEDG. Sedge under 300 at 276. I mean, if there's any more clear kind of Support? I mean, there's my support line at 300. It goes right through there. The problem that you have to worry about is, are they going to cut spending and blah, blah, blah. Just don't know. UNH is almost over 500 again. Let's see. God, there's so many down there. One that I want to look at is Roblox. Earnings on May 9th. We may go over all that stuff. Okay, I didn't see anything in the ARCs. Let's look at the Dow 30. I think I'm going to get covered mostly. Oh, American Express. Nike. Let's look at the NASDAQ 100, which will probably have a ton, and I'm going to have to trim down. Oh, there's the nanny. Into it. Post-tax time. I mean, you had your 10% if you bought it. In my mind, I think 400 is your swing on this one. But Melly has just been a monster. I brought this one up before. Their earnings are coming up. You know what? Let's see. We just had a cross up, so we'll bring it up. NXPI had their earnings. They blew it out of the water. Broadcom. And the ascending wedge. I'm good with that. Okay, let's see. S&P. And then I'll do the energy sector if anything stands out. S&P 100. AT&T. It's just a dog. I won't put anybody in that. Union Pacific. Not a bad one. Lindy. MetLife. Insurance has been declining. GE finally over 100. That's a crazy stock. GM, their earnings, they just had their earnings. They just made some type of announcement, so it's on its way up. What kind of say? When are Ford earnings? That's a good question. Ford earnings, yeah. May 2nd. Today, I think it's after the bell. Yeah. Let's go to Earnings Whisper. Calendar. After market close. AMD. That should be a good earnings. Starbucks. Earnings. Progressive. Energy Transfer. That might be an interesting one to play. Let me see the chart on Energy Transfer. It's up there. That's a big PE for energy, but boy, you are 9.53%. The average price target is 16 and you're at 12. Here's a Motley Fool article. You know what? We're going to do ET. Earnings. I like that. Yeah, it's just more Motley Fool crap. But I do like, I mean, listen, the most recent Citigroup 16, Morgan Stanley in January. This is all from 2022. So it doesn't get a lot of coverage. But you can see everybody's buying at 13 and 12. They're buying a lot at 13 and 12. Yeah. Okay. And that's just February. So that was back here. And you're at 1291. I might buy some ET today. That's a good one. Okay. I think I've got enough to talk about. Let's go to strategy tester, 4 hour. And it just had a cross up. Boy, I like this ET setup. I like this one a lot. It's run a little bit, but oof. Okay. Anybody listening on YouTube have any questions before I get started on this? Hopefully I still sound good. Okay. Anybody listening on YouTube have I'm not cracking. Sweet. Okay. Let's look at top. Top is at 56. It closed at 51. It's up 6%. Look at the volume spike. I wonder if the shorts got out. Huh. Let's look at SPY real quick. $415.47. It got you in. Look at weekly. Okay, we'll start out with that. I guess nobody has questions. I'm going to start recording. Good morning. It is Tuesday, May 2nd, and you know what Justin Timberlake says? It's got to be May. Thank you guys for your patience. Yesterday, I had a day with a teenager who had attended Sunday night, went to the Taylor Swift concert. Then we wound up going to Waffle House. So for all you Southern folks, you know about Waffle House and how fun that is after a concert at 1 a.m. So there literally was one cook and one waitress, and they were taking the order from the table and then cooking it. So it took a good hour or so. But I was a little bit crazy. Wanted to start off with some things that I've posted in the private Facebook group. If you're not part of the private Facebook group, look at the link tree. There's a link down below. And below my picture, the kind of caption on the link tree, there is a Facebook icon, all of the social icons up there. Join the Facebook private group. It's in there. That's typically where I post. And I know a couple of people have said, well, I don't pay Facebook. I also have Instagram. I also have Twitter. If you are against social media, I do have an email address that is listed up there. You can email me directly. And I am starting a newsletter. I promise I'm just lazy, but it's all up there. You can see it, it's all up there. The specific, if you want to watch the charts, if you're listening on Spotify or on Apple Podcasts or any of the other podcasts, you can just go to YouTube and you'll see a video of it. I show all the charts. It's on TrendSpider. And if you like the charts and you want to try out TrendSpider, there's a 7-day free trial. You get 25% off with the code DSP25. And you can use it at your discretion. So when I do go out to a Taylor Swift concert, you do not need to listen to my podcast. My podcasts are just ideas. 90% of my ideas come from TrendSpider and the algorithm and scans. I give you all of my algorithms, a 4-hour algorithm, the 65-minute algorithm. I give you my scans that I use daily to look for stock ideas. And I give you the watch list that I have, the core portfolio, all of the Vanguard indexes, all of the triple levered ETFs, which we had a ton of cross ups on. So, but none of that would make you as much money as Pepe coin. Pepe, I have no idea how you say it. I'm showing it from coinmarketcap.com. You can see this has been a crazy coin. Had you bought it here back in April 18th, April 20th, somewhere in that neighborhood, it is not even worth 1 cent. And it's still not worth 1 cent. But $3,000 into Pepe coin around the 20th of April is worth almost $3 million today. It is absolutely 100% a worthless coin. What is Pepe? Read this description. It is a deflationary meme coin. The cryptocurrency was created as a tribute to Pepe the Frog, internet meme. Basically, this guy created it. I don't think that he can sell it. It's got a volume, a 24-hour trading volume of $440 million. Supply of 420. I don't even know what that is. It's above trillion. I have no idea what it is. But it is absolutely 100% worthless, but has made people a lot of money. So Pepe coin. I figured I'd bring that up. I will go into a couple of things, but I wanted to update you. Where does our SPY chart look? Because if you remember last week, I was saying TrendSpider, we have this descending wedge and we have this ascending wedge. Are we in a bull market or are we just in one of these bounces? This is a weekly chart of SPY. Could we just be in one of these bounces? Well, I've said throughout this year, from December all the way up to today, I think we're in a trading range. And it's clear 420 seems to be the top of the trading range, and the bottom of the trading range seems to be about 385. And you can see that that ascending wedge has a support line right there at about 387 or so. We do have confirmation. We're going up. If you run the 4-hour algorithm on SPY, it just gave you a buy-in yesterday's morning candle at 415. So we could be going up. Again, nobody really knows. Anybody that tells you absolutely we know where we're going, they're just lying. Nobody knows. The debt ceiling, Janet Yellen said, hey, we're going to hit the debt ceiling sooner. So the president finally took a freaking meeting. I don't, personal opinion and totally personal opinion. My politics are completely middle of the road. I do not think that the Republican deal that they passed in the House is out of the ordinary, crazy, side wing. I think it's very common sense. I don't like the politics that they play around it, but I also don't think that that's a bad bill. And if the Senate were to just pass that, your boy would be personally very happy. But I think there's a lot of politics around that. And the other question is, if they pass that, would they get anything else in the future passed? Because now the Republicans know that they're willing to negotiate, blah, blah, blah. So it's all just a political shell game. I hate the fact that we're playing chicken. I hate our elected officials that do this. They should not be allowed to do this. This should be illegal. Term limits are absolutely 100% on my list of things that should happen. But oh well. But if you look at SPY and what the market's going to do, here's the thing that you're going to do. We're going to play chicken all the way up to June. Most likely, they will pass the debt ceiling and they will increase it. Remember, this is money that's already been spent. It's not money that is approved in the future. So this is 100% just money that's been spent. So I think SPY with the weekly that we looked at just before, in my mind, you're bumping up against that 420. Would I buy at 415? I probably wouldn't. Am I trimming here? No, because we still have confirmation. So there's my take on the overall market. I think we're in a good place. I'm not necessarily making a lot of moves as far as selling, but I'm also not making a lot of moves as to long-term buying. We're in this kind of just range. And again, tomorrow we're going to get a quarter point rate increase. It's going to mean nothing because more than likely we're going to start cutting later this year. And that's where you'll start to see the market really take off. And that's where the market is really anticipating, hey, they're going to start cutting and things will get better and blah, blah, blah. And maybe we go into a recession, but most likely it's a short recession. Let's talk about FRC. FRC is dead. And my apologies to everybody who got into FRC. If you lost money. FRC is at zero. What will happen? You will get nothing. Last week, I was pounding the table to try and sell it. And if you had any kind of hope that things would continue, at least sell half your position. I hope that most people got out. It was very clear bank management were absolute morons. You don't hold an earnings call for 12 minutes and don't take questions when you're in the middle of a bank run. People want to be soothed. They want to be consoled. So what happened? They sold the assets, or I should say, JP Morgan took over the assets. So there's two things that are clear. It is clear that JP Morgan will most likely in the short term lose money on these assets. They may lose money. In the long term, they underpaid for these assets and it will make them a tremendous amount of money. It's also clear that the FDIC is going to back every bank institute in this country. So there is no longer a bank that will go under and will fail and people will lose their deposits. They are going to back absolutely 100% every bank. That is very clear. They're not doing a 2008 mistake where they let Bear Stearns, even though Jim Cramer said, oh, Bear Stearns is fine. Well, Bear Stearns wasn't fine. He said it on a Friday. By Sunday, Bear Stearns was gone. Lehman Brothers, gone. He said it was fine. Jim Cramer. It's clear that they don't want another situation where a bank fails, just like we had in 2008. So they're going to back everything. It's also clear that they want business insurance with the FDIC. They want to include more than just $250,000. If you are an entrepreneur, if you know entrepreneurs, typically they need more than $250,000 in the bank in order to make payroll, unless it's a small business. But typically, medium-sized business need more money in the bank. So if you're only insuring them for $250,000, they're going to have to spread that out. SOFI came out with a great product for people where they'll spread it out across 20 banks. And they'll do it automatically for you, and you're insured in SoFi for I think it's up to a couple $1,000,000. So there's been some fintech stuff around that, but FRC absolutely dead. JP Morgan I won't invest in because of their Epstein ties. I think you can make money on it. I think it's a great long-term stock. I just hate Jamie Dimon. I think he knew about Epstein, and I think I just won't invest in it for moral reasons for that. DPST, how does FRC affect DPST? Well, DPSD is at 631, 632. The buy-in here at 694. You're still in based on the algorithm. I would rather see you trade DPST, a triple levered regional bank stock, on the 65-minute algorithm. And you can see ever since FRC kind of started back here April 17th, where we really started to see that FRC was going to go down, you haven't won. You've lost on all of these. I think DPST starts to pick it up. You are out of DPST on the 4 hour, on the 65-minute algorithm. On the 4 hour algorithm, you're in it, but you're losing. I wouldn't say get into it. Wait for confirmation. I think around $6. If we go down to $6, I think you take $6 and you buy it. There's a gap up here around 10 or 11 that may never get filled. This is not a stock that you want to hold on to for a long time. One that you do want to hold on to for a long time that I think is absolutely perfectly fine is Schwab. In the 4 hour algorithm, you are out. You got in at 57. If you're holding at 57, I hope you didn't get out with an 11% loss. I hope you're adding to this. Their earnings came out. They're perfectly fine. It's a $2 billion bank with, let's see, if you think that Schwab is in danger, their banking business is $2 billion. The actual market cap of this stock is $90 billion. So 2 billion is what? 4%? 4% of a company, even if it goes to zero, is not going to take a company down. The insider buys on this continue. March 28th, director bought $267,000 worth at 53. People are buying this in the 50s. Buy it in the 50s. I think it's a $60 stock. At some point in time this year, I think it's a $60 stock. I don't know when. Could it go back down to the 40s? Absolutely. I just think it's a $50 stock. I'm sorry, a $60 stock. So I do think that that's one you can hold on to for the long term. Schwab has tons of clients. My parents actually got upset. My guy Stewart at Fidelity is not their client, but they got upset at their advisor at Fidelity. Where did they think of going to? Immediately Schwab. And my parents are in their 80s. They're very smart as far as money goes. They love Fidelity. Fidelity had some issues with them. Long story short, they changed advisors without alerting them that they were changing their advisor. Their advisor wound up leaving Fidelity, blah, blah, blah. So they were going to go to Schwab. And not because their advisor went to Schwab, it's because they were upset that they got changed. So I moved them over to Stewart. My personal guy, Stewart, if you want to go into Fidelity and you deposit more than $2,500, transfer over, he'll give you, I think it's $100 or something. Just email me. I'll email him. You get a gift card in the mail. It's a nice little surprise for you. But Stewart is fantastic at Fidelity. Let's talk about my weekly stock pick. I know it's Tuesday. If you are subscribed to his newsletter, you know Microsoft is his pick. Here's my take on Microsoft. I think under 300, it's a great stock. I was saying this gap down here needed to be filled. It kind of got filled at 276 down here. You got another gap, though. You have a gap between 278 and 291. This week, when you're buying it yesterday, it opened up at 306 at 305. I don't know where you're going on this one. It's 100%. They had their earnings. It's 100% Chat GPT and AI hype. 100% AI hype on this one. So you've got this kind of button hook that we talk about all the time. You've had button hooks on this one. You didn't get out on this 254 buy. You got out way up here at about 285. Then you get in at 295. If you're in at 295, I might take some. I mean, you look at here's the fundamentals. The PE is 33. The forward PE is 27. The forward PE of Microsoft has been 30. So it's not like it's at an all-time high. Your target price is 325. That's the average target price. You just had a couple of upgrades to 347 and 325. You look at the insider stuff, they're selling at 248. They're selling at 272. The big sales came in September. That was from Satya. 14 million bucks, and Amy Hood sold 20 million bucks. That was at 259, 260. So you're above that level. Your 52-week range, your 52-week high is 308. So you're right up against that 52-week high. I don't know. His algorithm is great. I just think it's picked some stocks of recent that are bumping up against 52-week highs. So I speaking of 52-week highs, let's look at the big earnings announcement this week. It is my Super Bowl. Those that listen for a long time understand Apple. I have somewhere in the neighborhood of 30 to 40% of my entire portfolio in Apple. It is my savings account. I have held this since 2004. It has made me a great amount of money. I sold for the first time in December, and it was down here. I want to say it was around 130 in that area. I wish I had held on because we're at 170, but I sold it at an average stock purchase price of somewhere in the neighborhood of $1 or $2 per share. So I made a great amount of profit on this. It was to counterbalance some tax loss harvesting that I had at the end of the year. I'm not 100% upset. I have added throughout this year just based on the dividends and the dividend repurchase that I do. I buy whenever they give me dividends, a couple $1,000 each dividend period. It goes back into buying more Apple stock. So you can see on this chart, this is a 4 hour. We have confirmation. It is butting up right against 170. And if we look at Apple, the average target price is 170. The 52-week range is between 124 and 176. You are butting right up against that 52-week high. So what do you do? Zephan in our private Facebook group asked, hey, it's butting up against, should I before traditional measures like for earnings, not after. They don't want to gamble. So on run-ups, they sell before earnings. I'm going to give you three things that in my personal opinion, I think you do. The first is if there are long-term capital gains or if it's in a retirement account. And in a retirement account, there's no tax implication. Go ahead and trim it. You can trim it. If you think that it's going to go down on earnings, you can trim it. Again, your balance 50 the entire. You don't know, it could go to 200. It could announce, hey, wearables division all of a sudden got our app store. We wound up growing the app store by 40%. You don't know what's going to happen. That's probably not likely. Let's be honest. Most likely, they're going to announce some type of reduction in cost. They're going to announce some type of reduction in MacBooks specifically, and the iPhones. They're okay, but I don't think they're blowing it out of the water. There were some production issues. They're ramping up production of the iPhone in India, so there's probably some increased costs around that. Again, it's kind of, hey, what do you think is going to happen? In my mind, I think your floor on this one is in the 150s. Do we go back down to the 140s? I don't think so. But if you're worried going from 170 to 150 is going to hurt your position, go ahead and sell. I'm going to stop the recording real quick. Your floor on this one is in the 150s. Do we go back down to the 140s? I don't think so. But if you're worried going from 170 to 150 is going to hurt your position, go ahead and sell. I'm going to stop the recording. I don't hear it as choppy. Hopefully it's not choppy. This one is in the 150s. Okay. Thanks for the alert, Joe. I think I'm going to continue on. Hopefully it's not choppy. Sorry, had to restart the recording. So hopefully if you do sell, it is something that you're happy with and you can get back in, because I do think that Apple is part of a very good strategy. Let me make sure that the audio is okay while I'm recording. Sorry, had to restart the recording. So there we go. So again, with Apple, that's the first thing is you can trim your position. Second thing that I want to tell you to do would be to get some covered calls. You can get, so if you own the stock, if it's an IRA, you might not be able to do this because IRAs are typically in margin, not in margin, and you can't do it. But if you get some covered calls, what you could do is sell some future dated cover calls, and that will get you some premium. And if you sell some future dated covered calls, then you get that premium. If it does go down, hopefully the premium covers your losses or actually hopefully protects you from a huge loss. So covered calls are a good strategy to try and retain your actual asset value while maybe not selling your asset. Remember, if the price doesn't go down to the actual strike price at the time when the contract ends, you continue to hold the stock. You just got paid the premium. So that's the way covered calls works. Do your own research. I am not an options expert. I have done this in the past. I've collected the premium. For instance, in some of my Apple stuff, I've done covered calls that are 1 year out, and I collect the premium for 1 year. And I haven't had to sell because the stock has continued to go up. So that, in my mind, is a good way to try and get some quote unquote interest on stocks that you own that you think will go up. If you think it's going to go down, I don't. I think you should take option one. I think you should take option one and trim it. If you think it's going to continue to go up and your long term strategy is to continue to hold, covered calls may be your option. Um, the other thing that I want you to look at, and I should say it's three things that you want to look at, not three strategies, but the other thing that I want you to look at is I want you to look at if this is in a brokerage account. I want to make sure that you know there is an enormous difference between the capital gains that you're going to pay in taxes for a long-term asset, meaning you've held it for 1 year, and a short-term asset, meaning you've held it for under 1 year. Some people, like me, are in a 34% tax bracket if you sell short of 1 year. So if you sell it short of 1 year and it is a short-term holding, you're going to pay 34% tax. If this is part of a long-term strategy, I think you should just hold through earnings and basically just hold it for at least a year and build up that portfolio of Apple stock so that if you come to a situation like this in the future, you have the option of selling some shares that are actually long-term. Remember, you can allocate whether these are when you sell it, whether it's a long-term portion of your asset or a short-term. And remember, if you sell short term and it is a loss, or even if you sell long term and it's a loss, you can't buy back in for 30 days. It's a water something moment or something. You can do your research on that. But there's your Apple. Personally, I'm holding. I don't have any covered calls at the current time. I don't have any kind of assets or things that I'm holding. I do think that I may trim at 170, but I do have those long-term gains. So it's going to be a 15%. I probably have some short-term losses, or I'm sorry, some long-term losses that I can write off against it. If I do, then I can take these small gains. It won't be thousands of shares. This will be, if I trim it, maybe 10 or 15 shares. I'm not selling a large portion of my position at all. I will sell a short amount of this at 170 because I do think when they release the new watch OS, I think when they release the headset supposedly is going to be super expensive. But my belief is that Apple does this right, and they have spent a ton of money on actual programs and useful things that the headset will do. So I do think that people will buy it. Even at $3,000, I think Apple's going to get a bunch of fanboys buying this thing. So there's your Apple strategy. Let's talk about Uber. They released earnings this morning. It was a loss of 8 cents, which is better than the expected loss of 9 cents. You can see even in the last quarter, they lost 8 cents. Well, where were they at the last quarter when they lost 8 cents? $36, $37. Right now in pre-market, it's trading at 35. My guess is that this goes up to 37 during the day. The algorithm had you buy in yesterday at 32. I had mentioned back here last week, it dipped under 30. If you bought under 30, you're currently at about 20% gain. Right now in pre-market, it's up 7%. It is a fantastic trade. The CEO of Uber, I was listening to on CNBC, their business is up substantially. They asked about airport business. He said to and from the airport, big business. If you've been in the Uber app, if you use Uber, you know that they're charging for advertising as well. They have a ton of information on you. Remember, this stock at IPO was a $41 stock that went all the way up to 60. He announced that they will be GAAP cash flow positive sometime this year. The forward PE is 49. This is an expensive stock. Understand that it is totally expensive. The 52-week range is between 19 and 37. I think when they announce that they go GAAP positive, I think you see this stock at 40. I don't think that this is a short term unless you want it to be short term. I do think that the hype dies down at some point. I think those $30 shares, I think you can sell them at 36. I think you would be able to get back in at 31. In my mind, I think you hold on to these shares and I think you keep adding under 30. I do have Uber in the core portfolio that I have listed in TrendSpider. I think it's a great stock. I think the CEO has the right mindset. They want to be the last mile. So you will see Uber being the last mile of transportation, whether it's delivery, whether it's food, whether it's anything. You will see Uber as that company, and I like that strategy. So they announced earnings. Let's go to some earnings that are happening after the bell today. First is Ford. And while I don't like Ford as a company, they will announce their earnings today. It got a cross up here at $12.04. $12.04. Not a great price in my mind, but it's under the 200 day. You do have confirmation over the 9 day. They have their earnings. I've read that they will hype their EV. And you guys know what happens when a company hypes an EV. Boom, it takes off. So could you see this at about 13, 14 bucks today? If they announce good earnings, you see 51 cents here. If we go over to Earnings Whisper, you can see the expectation is 39 cents per share. Well, that's down from 51 cents per share. But even if they hit that number at 39 cents, they don't have a huge number to beat. 4.5% expected growth, revenue growth. Not a big revenue growth. They're heavily unionized. So, in my mind, I think if they announce that the Ford Lightning has been selling a ton, that they have some new EVs on the horizon, and that they qualify for the $7,500 tax rebate, I think you see a good reaction to this stock. But again, I'd rather see you buy it in the $11 range. Right now in pre-market, it's trading at $12.09. If you can get an 11 handle today, I think you'd be good. And at some point in time, you might go back down to 10. But at some point in time, I think you will have a chance to sell this up here at this gap at 13.15. You just haven't covered that gap. At some point, that covers that gap at 13. So I think that's a good one. Another good company that's announcing after the bell is AMD. Chips have been on a tear. You have a cross up here at 89.26 just Friday. Yeah, Friday it was. The RSI is at 51. The MACD crossed up. You do have this gap down here at 75. I think it's a $100 stock. Honest to God, I think it's a $100 stock. AMD, I own this one at a significantly higher price. The PE is 101. The forward PE is 20. They're growing earnings. They're up 38% year to date. The average target price is 100. I agree with that. The 52-week range is between 54 and 109. I think you see this one come back to this 109. That was here in August of last year at the high. I think you see it back there. I just think AMD's too good of a company. And if you think 101 is a crazy PE, look at NVIDIA, 166 with the same 47 PE forward PE. NVIDIA's up 97% year to date. It's got barely any dividend. Its average target price is 288 and you're trading at 289. The 52-week range goes up to 290. So am I upset at AMD at 90, thinking that maybe it goes to 100 after earnings? No, I think that's a good bet. Starbucks reports after earnings. This is one that's been on an absolute tear. Under $100, great trade. 99.07 back here on March 16th. It's just run too much. 114. Am I concerned about this one going to 120 before it goes to 100? Yeah. I mean, I'm just not. Your 52-week range is 68 to 115. You're less than 1% from your 52-week high. So far this year to date, it's up 15%. It's got a 1.85% dividend. Your target price is 112 and you're trading at 114. There's no reason to get into this one and risk it on earnings. In my mind, again, with Apple, with Starbucks, I would probably trim on this one. Honest to God, I would trim it before. One that I think is probably the best earnings play today is ET, earnings transfer. It's trading at 13. I think you can get it for a 12 handle, 12.94. Just last Friday, was the price that the algorithm, this is the 4-hour algorithm, said get in. If you got it down here at 12, you're doing great. But 12.94 was the price here. Their earnings are coming up after the bell. Specifically, what I want to look at is ET. We'll go to FinViz. The target price is 16. So average target, this is an energy company, oil and gas. Its PE is high at 9. Forward PE is high. But you know what else is high? That dividend at 9.53. They will announce a dividend X date, and it's usually, you just passed it here. It's usually just before their earnings. They didn't have one here, but they'll announce another one, and you'll get paid out. Most likely, they're going to continue to pay a huge dividend. Year to date, you're up 8.7%. You are 5% below your 52-week high of 1367. So you are bumping up against highs, but I think this one has a good chance of going higher and up to this 1687. I think it gets close up there. Let me look at my notes. Look at the dividend. Look at the insider buy. And by the way, Citigroup was the last one that initiated coverage back in December, and they put a buy at 16. The only other coverage, Morgan Stanley, overweight at 12, but that was January of last year. You can read some of the articles about the ultra high dividend, how Q1 earnings is expected. But here, look at the insider buy. February 22nd and February 23rd, 2 days in a row. The executive chairman bought $40 million. And you know what he bought it at? $12.99 and $13.05. Yeah. And in December, the director, Richard Brannon, he bought almost $1 million worth at 11.55. So I think if you can get a 12 handle on this one, I think that's where they're managing this business to be at. And even if for some reason the stock winds up just hovering and hanging out here in the 12s, you're getting paid 9.53% on a dividend yield. So I think that might be the best option for today, earnings transfer at about the price that somebody paid $40 million for. So earnings today, I think those are the two. Let's talk about big short squeezes. top. This is one that was up 3,000% last week. If we look at it in Active Trader Pro, I'll swing you over here to Active Trader Pro. Right now, it's trading at 56. It closed at 51. Still got some play. Still got some play in that one. Another one that is a short squeeze that from last night is GDC. This one is, oh, come on. It is GD Culture Group. There's no reason for this one to be trading up in the 30s and 40s. It went yesterday all the way from let's see. It went from, oh, I don't see the day range, but yeah, 52-week high is 44. It said it yesterday. 52-week low of $1.80. Right now it's trading at 17. It closed at 31. I probably wouldn't get into this one. See if the volume is expected to be high. It is still very high. So I think you've got some short squeezes there. If you want to see real short squeezes, then go over to you go to stock websites. I think it's pre-market movers, investing.com. And you can see all the pre-market active stocks here. You can see Mullen is up 5%. Hour Loop, which is the symbol hour, is up 179%. Faraday, which we talk about, FFIE is up 5%. Holes Holding is up 40%. TIRX is up 62%. So you've got options on that one. Just go over there and you can look at that one. That's typically what I do to see that. Some stocks where we have some swings, kind of like Uber, where I just kind of tell you, hey, this is a good price for this. Sedge, Solar Edge. We talked about this one being $30, and you can see the line that I've drawn. That's about $300. It's at 275. Their earnings are coming up on May 3rd, so tomorrow. I think it's after the bell. Let me make sure it's after the bell. Yeah, post market tomorrow. Will they do good? I don't know. I mean, you got this gap down here between 250 and 260. My particular opinion, you buy under 300 and then you sell when it's over 300. Look at how many times just since November you were below 300 here and you sold over 300. Boom. You went down. That's one. There's a sell again. There's two, opportunity there. Boom. There's three, opportunity there. There's four, opportunity there. There's five, opportunity there. There's six, opportunity there. There's seven, opportunity there. And then, 8 times in a matter of 6 months. That's not bad if, as far as the pivot point right there. You're in this trading range. I would have some pretty tight stop losses trading around earnings, though. It doesn't have confirmation. That's the danger part. It opened up down 1% at 273. That's the dangerous part right there, is that it doesn't have confirmation. I'd rather see you buy it under 300 with confirmation, and confirmation means over the 9 day. Now, if you want to use the 65-minute algorithm on this one, Solar Edge, I still think 300 is your buy. This one has you in at 285, but it doesn't have confirmation. Again, it doesn't have confirmation above that 9 day. So the 65-minute algorithm, you can see that line stays in there at 300. You can see some gaps above. Doesn't really have gaps below that are in the near term. The Solar Edge is one. Another one that is coming up with earnings and is below the price target that I kind of put on it is Roblox, RBLX. This is a, and I'm going to have to restart the TrendSpider. Roblox is a metaverse company, and with Facebook or Meta, however you want to call them, basically saying that they are out of the metaverse. They're spending it's a year of productivity and efficiency. Roblox is the benefit of that. And Roblox is where all of the creators for metaverse stuff, that's where they are putting their money in, Roblox, because the creators can make money in Roblox. The RSI is way down. It's at 25. The MACD is crossing up. You don't have confirmation in the 4-hour right now. You've got this gap up here between 42 and 44. I think that's the gap that gets covered. And I think what happened here, what created this gap on April 17th, is that they announced that their users are down. During the pandemic, this one, benefited greatly. People were spending money, but go and ask your kids if they're playing in Roblox. If they are, under 40. And here's the thing. Here's the thing about Roblox. It is expensive. They're not making money. They are for every dollar that they make, they spend $9. So they are not making a ton of money. It's up 26%. The average target price is 42 though, and you're trading at 36. Now, Jeffries on March 10th moved them up from $30 to $48. Benchmark Company moved them from a sell to just a hold. I don't know what the F that is about. You can see there's been some sales around 37, around 45. They're typically selling anywhere between 35 and 40. And so I think that's where they're managing this company between 35 and 40. Well, you're at 36 right before earnings. So I do think that that's another one that you could play earnings. Again, ET is my earnings earnings play today. I do think that that one may be a good one. Your boy here may actually buy it. But Roblox is another one that I thought was a good one. Let's go into some scans. Pfizer. I took this one off of our core portfolio just because I don't like it, but it is beaten down enough. It's a $45 stock. You have a buy here at 39.17. You have that button hook that I talk about all the time. They announced earnings. They're up 1%, 39.66. The difference between Pfizer and Moderna is a one-trick pony. Moderna is 100% just a COVID play. Pfizer, on the other hand, has just an asset, just a library of drugs. So Pfizer, I think, is a better opportunity if you're looking long term. They also have a pretty good dividend. It's 4.18. Their forward PE is 10, their PE is 7. They're down 23%. They've been beaten down, and it's because no governments are paying for COVID stuff anymore. So you can read up more about it. There was a buy here from a 10% owner of $5 million, and their cost was only $2.76. That's an insider buy. I mean, they're basically giving the stock to continue to hold 10% of the company. XLY, which is the consumer discretionary. This is part of the core portfolio that I have because I do think that this is a great just buy and hold. XLY is the consumer discretionary. If you want to see what's in the XLY, Google it. Your boy ain't going to tell you what's in an ETF. Just know I personally own this one. I own a good amount of this one. I just buy and hold it. XLY is a good one. VTRS came up as a scan as well. This is a spinoff from Pfizer, where if you owned Pfizer stock, they gave it to you. It's been kind of a drag. It hasn't done anything. But it crossed up since I own it, and it crossed up. I figured I'd bring it up. But VTRS, it's not one that I hold a lot of. I think I own less than $200 worth of this. I do own quite a bit of Cleveland Cliffs, and I bought, and I shouldn't say quite a bit. I do own, thousands of dollars worth of Cleveland Cliffs, and it's up here in the I think in the $19 range. When it dipped under 20, I thought it was a great buy because I do think that it's a $30 stock at some point. It crossed up at 15.21. We talked about this one having some insider buys and maybe this being the bottom. The average target price is 21. So even target prices here, you can see 14.96, $2 million worth from the CEO, which is a lot. You had more insider buyers. Director bought $22,000 worth, and the EVP CFO, he bought $100,000 worth. So they're buying to kind of put in the bottom. Just realize Cleveland Cliffs, I'm probably going to buy more because it says to buy more. I'm not selling. I want it long term. I don't want this one to be a short term buy. I want it under long term. It is in my regular account, but it's there. We talked about Pfizer. Moderna had a cross up here at 133.37. This is 100% a hype trade. Their earnings are coming up May 3rd. Is it pre-market tomorrow? Pre-market on May 4th. So it's pre-market on Thursday. So it's, they could announce something with their flu vaccine. They could announce some partnership. You got a gap up here about 165. If we go over to FinViz and we look at this one, you can see the PE 6. They have no dividend. They're down 25% year to date. Their average target price is 221, and again, they're trading at 133. Problem is, it's a one-trick pony. The other problem, the CEO sells somewhere near about $10 million a day in stock. And he's been doing this for, I want to say, 2 years now. And it's a day. It's not even like, he's hiding it. It's $10 million a day that he's been selling. So in my mind, you trade this one. You don't own it. Their biggest thing that they need to come out with is the flu vaccine, and they have some promise with it. In the energy space, Marathon Oil cross up here at 24.04. You're trading at 23.38. They're coming out with earnings. I think it's today after the bell, post market today. This is one that I don't necessarily. I have friends who own this one. I don't own this one. I own enough Exxon and I own enough MPLX and I own enough energy. This isn't one that I've put money into, but it is one that I have traded in the past. I've made money off of this one in the past. It is a Leon Cooperman. He is one of the billionaires like Warren Buffett. He's touted this one. He owns this one long term. You know, Buffett owns Oxy. Leon Cooperman owns Marathon Oil. Another energy company. I always call it Venom, but it's Viper. VNOM. This is a small cap, and they do have. Let's check MRO's dividend. MRO's dividend is 1.66, so it's not huge. Venom, on the other hand, this has a 3.44% dividend. It is high on the PE at 14. It's significantly high. They have to grow into that because typical energy companies are about like 5 to 10. You can see there's been a lot of selling of recent around $30. You're trading at 29.10. It crossed up here at 29.12. You're trading down 5%. They did announce earnings. They announced earnings today. Wasn't good. They're down 5%. I don't know that I'd buy it even here at 27. If you take a look at the energy sector is tough, and I think you pick your winners in the energy sector. But if you look prior to COVID, it's a $24 stock, and you're buying at 27. What have they done from this date to this date? Probably not much. Rather own Exxon. So Venom of Viper, another energy company that is ConocoPhillips, COP. If I could type up here, I can't type. COP, ConocoPhillips. This is another good company, energy company. Their earnings are coming up. It looks like, is it post market today? Pre market on Thursday. 102.51. I think you could get this. It's trading for $100.81. I think you get under 100. I don't think under 100 is a horrible price. You're just trading it into earnings. And Viper, remember, they have a 14 PE. If you look at ConocoPhillips, they have like 7. And ConocoPhillips has a 5.21% dividend. It's down 12% year to date. Average target price is 131. Oil's just been going down. So I do think at some point in time, oil has its day this year. XLI, which is a spider sector fund for industrials. This is an interesting one. I don't think you trade it. The algorithm loses you 2%. Buying and holding the asset loses you 2%. It's industrials. You're not going to make a ton of money off of this stuff, off of the spider sector. But it's for people who just want to manage risk. XLI, industrials, is a good one. One that I saw had a cross up that has been absolutely going nuts is DraftKings. It had a secondary cross up here at 22. Their earnings are coming up. Let me see. It is May 4th post market. So it's Thursday after the bell. Your boy sold this one down here around 11. I took a huge loss. I think my average purchase price was around 40. So I took a loss and I sold Apple against it to take the gains. But ever since that 11, I mean, you're up here at 22. You've doubled your money. Since January, year to date, you've doubled your money if you bought here at 11. And I probably would have doubled your money and then gotten back in at 17. I mean, look, 63% gain. So DraftKings, the problem that you have is they're not making money. It costs them a ton of money to actually wind up getting customers. Now, AI. This is a hype stock. I mean, this was 100% in January. It's an $11 stock. You went all the way up to $30, and then you got out with 100% gain in February. You got back in. You wound up losing money. The algorithm, it loses you 59%. This is 100% just a hype stock. Hindenburg Research published a short squeeze on a short paper on this one that they don't like it. It's just fake.
The CEO, when you hear about him, he talks about Google searches. I'm just not a fan of this one. It has a cross up here at 1843. My guess is you get back down here. The good news is if you wanted to invest in this and you think it's a good business, here's the gap that it just filled between 17 and 18. And the only other gap that's in the near term, there is a gap back here down to about 15. But the gap in the near term, 31. So the short paper from Hindenburg is the trouble that you're going to have with this one. And they're not making money. Let's be perfectly honest. This is a company that's not making money. They lost $262 million. March, they were supposed to come out with their stuff. Wolf Research came out, underperformed, price target of $14. Their average price target is 19, and they're trading at 18. So it got hyped up there with the artificial intelligence stuff. I'd be a little bit careful. I bring it up because it was in my list of things to watch. I just haven't traded in quite a while. Baba, cross up here at 84.16. Your boy sold out of a bunch of this for a loss in December. I am not getting back in. China just scares me. I'd rather invest in something like the KWEB, which is the Chinese ETF. And you can see that the algorithm just doesn't really perform all that well. KWEB, you're down 52% over 2 years versus the actual asset is down 51%. So you save 10% just using the algorithm. It got you in Friday at 28 and you're at 27. I just don't trust China stuff. Right now, I just don't think that China is worth the bet. I think there's too many other things that are worth the bet. Like this one, industrials. We talked about XLI, Deere. 382 is the cross up. Now, here's what you have to know about Deere. Deere has just been a bear of a stock of recent. If we look at a weekly of Deere, you can see it's in this ascending wedge, but it's on the bottom side of this ascending wedge. If you go back to pre-COVID, this is a $166 stock. $166 stock, and you're trading at 385. So it just, again, it's gotten hyped up. I don't think that it's not worth that. Its average target price is 470. It's a 1% dividend. Year to date, you're down 10% on a heavy. This is a $111 billion company, farm and heavy construction machinery. The most recent initiation outperformed 440 is the price target. You're at 380. The 52-week range, you're 14% above, below your 52-week high. You're 34% above your 52-week low. I would say that number needs to get down more towards the 350 price point, and there you're in the middle of your 52-week range before I'd actually feel comfortable buying this one. But 384, it did get the cross up there. Another one that's interesting to me, but I'm not sure I'm actually buying it, is DocuSign. If we look at DocuSign in the algorithm, the algorithm saves you half your money. You lose 42% versus losing 80% in the just buying and holding. DocuSign has just been a bear. It crossed up here at 49.51. The RSI is at 29. You're trading at 48.90, so you're down below that. I don't know that I'd necessarily get into it. Your most recent gap is around the earnings where it dropped. The gap is between 63 and 59. You can see it just any reaction in the market's an overreaction, and again, it kind of came up, but it lost its way, and it just kind of continued to go down. It crossed up. I bring it up. I'm not a huge fan of it. American Express. These are the Dow 30s that are crossing up. American Express is just like SPY right now. It's got this ascending wedge where you're kind of below it, and it's got this descending wedge right here where you're just kind of in the middle. The support is 155. You're trading at 157. AXP, I think it's worth the risk here. Its average target price is 184. You're 13% below your 52-week high of 182. If you're buying at 157, I think you're looking for a 180 price. And I think that's where you look at maybe getting out. Year to date, you're up 6%. Its PE is a bit high at 16, but look at the PE of like a Visa, 31. Visa and AXP. American Express, you're going to benefit from increased business travel, increased business consumer. That's where you're really looking for AXP to really shine. But they're past their earnings. There's not a huge catalyst. I think this is one maybe you just add to your portfolio and hold for at least a year. And another Dow 30 stock, Nike, had a cross up. I think it's a secondary cross up. Yeah, it's a continued cross up. Your initial cross up was March 31st at 121. They've had their earnings. There's no real catalyst other than maybe there's some hype from China reopening. Who knows? But Nike crossed up as well. It's a secondary cross up. Your boy wears Puma and Under Armour right now. So Mercado Libre, Meli, M-E-L-I. This has been a stock that has been on an absolute tear since January. January, the buy-in was 856. You're at 1285. Its earnings are coming up. I think it's tomorrow, May 3rd, post-market. So tomorrow after the bell. It's an interesting play. I just think it's run a little too much. And we can take a look in FinViz. It is one that its PE is 134. This is, by the way, if you didn't know it, this is the Amazon of Latin America. It is up 53% year to date. Amazon ain't up 53% year to date. This one's experienced huge growth, 15% above its 52-week low. 52 low was 600. Its 52-week high is 1337. So you're only 3% below that week high. Again, I think one's running into its 52-week high higher to justify that. Probably, but now I'd probably go Roblox, ET, those earnings. Finally, GE. GE crossed up. This stock, God, beginning of the year, you could have bought this in the 60s. It's 101. In my mind, I think anything under, I think you could take this one and buy it for the long term. I go into 200. This is just that kind of recurring. The algorithm, if you listen to it, it's great because it makes you 53, just 22% on the actual asset. That's not including this buy-in at 64, which you're going to get probably close to 89%. So it's just been, it's a good company, good fundamental. They're finally recovering from the disaster that was their past management. Average target 105. You're bumping up. So stop. I probably just run too much. I include all of the. Let me stop quick. Up again. Past management. Oh, I hate that. So stop. I don't know why it does. I got all of the. Thank you. Hopefully it wasn't very long. Now, I guess it's got to do when I record. You know, I didn't do this. Hold on. I get this guy. Didn't do this. I think it's connecting to here. We're going to go to our Bluetooth settings. And we are going to when last connected. Boom. Okay. Connecting to here. Let's see. This should be better.
Go to our Bluetooth settings.
I think it's better now.
And we are going to.
Thank you, Q-Tip. You not only help my ears, but you help everyone else's ears. Just don't go in too deep.
Let's see. This should be better. Go to our Bluetooth settings.
Okay, I think I'm good now.
Better now. And we are going to.
Yeah.
Thank you, Q-Tip. You not only help my ears, but you help everyone else's ears. Just don't go in too deep.
Okay. Boom, boom, boom. Oh, fun. Third recording that I have to do. So I'll put this all together. I'll put it in GarageBand. I know I was cracking up there. My apologies. But yeah, just I'll put a list of ETFs and Vanguard funds below. SVIXY, UDAO, URTY, HIBL. They all got cross ups. The one that I do think is worthy of mentioning is VIG. This is a dividend appreciation fund, Vanguard. It's just an entry point. I think you'll probably come back down here to 149, but 10 years from now, are you upset that you bought at 157? Nah, versus 150. It's not going to make a difference to you. You'll continue to get a good dividend, blah, 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 the whole thing. So I'll put those down below. Hopefully I gave you guys enough information. I know it's going to be close to an hour that I talked today. Hopefully I didn't talk too much. I gave you guys some great advice, I think. Hopefully you agree. Let's talk about the sponsors. If you're paying more than $30 per month for your phone bill, there's a link below for Visible. I personally have Visible. That's whose link you're using to actually get it. You'll get $20 off your first month. Your first month on the lower tier, which is the tier that I have, is $25, and $20 off that is $5. If you have a phone that has eSIM, test it out, try it out. I have an iPhone 13 has eSIM. I use eSIM. Never got a SIM card from them. I don't care about a SIM card. I'll just use the eSIM, and it's great. It's perfect. I go to stadiums a lot. I don't get deprioritized. If you're worried about deprioritization, take the upper one. I think it's $35 a month or something instead of $30 a month. So your first month is $15, and then you pay $35 after that. I don't know exactly, but if you're worried about deprioritization, the top one I don't think gets deprioritized until you hit like 50 gigs or something. And look at your usage on your current plan. I guarantee you ain't using 50 gigs. So other sponsors, TrendSpider. If you like the charts, if you like the algorithms that I use, if you like the price points that I do, if I'm on vacation, you can use TrendSpider. That's where I get all this information. That's where I get all my ideas from. So TrendSpider, there's a link down below. Use it. You get a free 7-day trial. DSP25 saves you 25%. Join our Facebook group. The link tree down below has all of the socials that I'm on: Instagram, Twitter, YouTube, all of that stuff. Join it down below. And you can sign up for the newsletter. I don't do a newsletter right now, but when I get unlazy, you'll get access to the newsletter. If you don't have any socials and you just want to email me, my email address is down below. I'll respond to you. I'll let you know if you have any specific questions. I may address that on the podcast, or I may just email you if it's a crazy one. If you're one of those day traders who says, hey, I've got this penny stock and it's going to explode. Yeah, I ain't going to address that on the podcast. I'll probably just email you back that you're crazy. So it is what it is. But taking a look at the market, Apple is up 0.6. Amazon is up 1%. Merck is up 1%. I'm looking at the core portfolio that I have here. Microsoft is up 0.8%. Qualcomm up at 116 at 0.84. Uber is at 34. It was up at 36 almost. So it's down a little bit. Tesla is up at a couple of percent. Tesla, I continue to say it will cover that gap. If we look at this one, I think you're going to cover this gap down here to 147, but you did have a buy-in at 163. You're trading at 164, so maybe I'm a little too late. United Health, almost up over 500 again. Remember, your boy bought in at 485, added more at 485. You still got this gap down here to 474. So be a little bit careful. But long term, I'm holding that one for long term. I'm in it. I think it's between 480 and 485 is where my average purchase price is. So Exxon, by the way, I'll mention Exxon. Exxon's an interesting one because Exxon is the exact example. You had earnings, you hit up against 52-week highs, and now you're just dropping. So if we look at Exxon, Exxon had tremendous earnings with gas on average about $75 per barrel. And their PE is 8, their forward PE is 11. It's a 3% dividend. They are buying back a tremendous amount of stock, but you can see this multiple top up here at 117. Well, the 52-week high is 119. The target price is 128. You can see downgrade Goldman to 125 is their price target. The reason it's 125 is they just think there's a cap here. You're at all-time highs up here at 120. So probably would have made sense to trim some up here in the 117, 118 range. Even at 112, probably makes sense to trim. You can see this gap all the way down here to 109. If you cover this gap at 109 and you're below this 200-day, I'm adding in. Your ex-dividend date is your next catalyst on May 15th. And again, it's a 3-point-something% dividend. So you can always get into it. But again, I think there's better opportunities in the energy space, specifically the one that Exxon is rumored to be willing to buy, PXD. They had their earnings. They have a huge dividend. This one got you out on the algorithm. You're covering this gap down to 209. It's a 212. Your boy here, average purchase price around 208, I believe. PXD, wait till you see this dividend. It's 10.69%. That's why I hold it. I'm holding this one for long term. If it dips under 200 again, your boy's going to buy it. The PE is not crazy. It's at 7 and 9. They're going to continue to make money. And if Exxon is going to buy them, they're going to buy them at this at least target price of 254, at least 254. And maybe Pioneer doesn't sell even at the 254. So maybe Exxon has to spend a ton of money and buy them at $300. But PXD is one that I'm bullish on as far as the energy space. Right now, it's just, look at that, $5.91 a share, $5.21. You know where they're putting that money? They're putting that money back in the dividend in the shareholder's pocket. They're putting that money back into the stock by repurchasing stock. So PXD is one that I like. Okay, I'm done. I'm going to go edit this together. Take care. Have fun. I will talk to you guys tomorrow. Okay, now I got to put all this into who texted me? Okay, I am going to put this into where did I do it? iMovie, I think. We are going to, let's see. I think we did 3. Yeah. One, 2, 3. Okay. Okay. Put 1. Hopefully I don't break up on this one, but the computer, GDC is halted. GDC is halted. Oh, let's see. What's the market doing? It's down. Oh, is iMovie stuck? Oh, come on. I need to force quit, I think. Force quit iMovie. We're going to reopen iMovie. I love Mac and all the tools that they have. Have I told you I'm long Apple? But I can open up GarageBand. I can, this is a 2015, 2016 iMac. Not even the top of the line iMac. It's the bottom of the line iMac. So let's see. It's still processing everything. Boo woo woo. Anybody have any questions while you're listening? Okay. I think it'll be okay. We're going to let this process. File, export, audio only. 1. Pod. 2. Export as 2. Pod. And then we're going to export 3. Export as audio only 3. Pod. Save. Okay. And let's OBS. Gonna go over here. Do I have any? I don't think I've got anything. My computer is resource limited right now, I want to say, but let's see. Let's go over to Active Trader Pro and let's look at, this one's halted. Let's look at top. Top is up 13%. Wow, that's crazy. SOFI is the most active. I think I did that one, Brian. Here. Oh, you know what I didn't go over with Apple? This chart. Look at Apple year to date versus XLK, QQQ, Microsoft, Google, SPY. Look at the year to date numbers. So Apple most likely is coming down. But here, let's do UPS. And we will add comparison FedEx. And we'll compare it against, and this is just performance. We can go over here and look at UPS. PE is 14, forward PE of 15. Dividend is 3.56. Year to date, 3.2%. Versus FedEx. Their PE is 19. forward PE of 12, dividend of 2.19, up 31% year to date. When you look at United Parcels, year to date versus it's up 2%. FedEx is up 28% year to date. SPY is up 8%, so you're in the middle. So UPS has completely underperformed. When you look at a 1 year, FedEx is greatly outperforming it as well, 2% versus 17%. That's just nuts. Again, that's 1 year. When you look at 3 year, it starts to get a little bit more murky. You're up 98% in UPS, 96% in FedEx. You're only up 45% in the S&P. That's over 3 years. So again, you've had 3-year bull run. 5 years, it gets even murkier. And UPS is up 61%. FedEx is down 5%. And that's 5 years. So in my mind, short term, I think UPS has to recover, and I think FedEx may come down to kind of meet it. So I think UPS is a better term. I think both of these, based on the the 3 year, just look at the 3 year versus the S&P. I think both of these and shipping as a whole gets less long term. And when I'm talking long term, I'm talking 10 years. And the reason I think less is when you look at the Falcon 9 Heavy rocket from SpaceX, and you look at Blue Origin, and you look at some of these space plays, it will actually cost less to ship something. Now, mind you, UPS and FedEx are in this country and in other places, they do have last mile, so they're not all big, but they do get paid to ship things long distances, meaning international. And that international portion, FedEx has a lot more of than UPS. So if you're looking long term, I don't think that shipping is probably the answer. I think space is your answer. B, I think UPS probably has a better quote unquote business because their PE is lower and they have opportunity. But I think FedEx was the obvious, FedEx is cleaning up their business and their balance sheet. So let's look at Etsy. Your boy owns Etsy in a retirement fund here. I own it. It's a pandemic. I mean, 100% it's a pandemic. They're considered pandemic. Here, let's take a look. We'll look at a weekly. Because where was Etsy before the pandemic? Etsy was at 60, in March of 2020. And then the pandemic took it down to 30. You're going back down to 60. I own it, though. I own it at, I want to say 100. But here, I think it's they're not making money right now. Their forward PE is 28. Price to sales, for every $1 that they make, they spend $4. They're losing $690 million. Year to date, it's down 19%. Target price is 131. Piper Sandler brought them up from 135 to 140. You look at insiders, they're selling. They're selling a big amount at about 100. And you're at 95. So your 52-week range, you're right in the middle between 67 and 149. But I think this long term, look at it where it was before the pandemic, $60. So John, I'm adding to it. I'm not taking away. I'm not selling it. Because it's in a retirement fund, I've been trimming it, but I still own it. But I am starting to add to it at the under 100 price. I just don't bring it up because it's one of my bigger losers. Let me see. I'll tell you how much I've lost on it. Let's go to the indices. Yeah, I think you're right, Christian. I think PXD does. I'll look at Salesforce. I own Salesforce at a higher price as well. I'm just going to look up my Etsy position. Etsy, I have 100%, 100 shares, so it's not a ton. At a purchase price of 127, average of 127, 127.93 in fact. I'm just not real bullish on it. So the 100 shares that I own is not a large position. I think I've halved the position over time. I made some money on it early, but it's in a retirement fund, so I don't know. Salesforce, I'll tell you what I'm in. Salesforce, I own 30 shares. And I own 30 shares at an average purchase price of $220. I think that was around 70, and I've made some money on it, but right now it's an average purchase price there. So I've lost 10%, 10.69. On Etsy, it's 25%. So, but both of those are in retirement funds. So I'm less likely to kind of, both are good companies, and I think both have good products. Etsy is questionable whether it's a good strategy for long term, just based on the chart and the pre-pandemic price. But it's a little bit. Do you think Amazon hurts the shipping companies? And yeah, Amazon's getting. I mean, I think artificial intelligence hurts the shipping companies. And the reason I say that is artificial intelligence will be able to instantly compute who's got a better price going where. And I think that last mile of actual shipping, I think whoever figures out artificial intelligence can actually do the shipping at less. You see that Amazon is figuring out their own shipping. And what do? They do gig work. And so Uber might be a better play for the shipping. Now, Uber hasn't done a very good job of managing their on-demand delivery, and they were looking to sell their freight division. But I don't know that for sure, but I do think. Listen, I'm big in Amazon. I've told you I love Uber under $30. In fact, I may even buy it at $35 today because I do think it's a $40 stock. But I love Uber for that last mile. I don't love UPS and I don't love FedEx. And the reason I don't love them, both of those have higher costs than Amazon's actual in-house shipping. Look at how Amazon does their shipping, and I think that's where you're going in the future. And I think both both FedEx and UPS have to guide towards that reality. But CRM, let me look at CRM real quick. Chart's good. I think anything under 200, I think you can buy CRM. I don't think that I think CRM is similar to Amazon. They don't have a demand problem. That PE of 960 is what kills them, but they don't have a demand problem. They have a cost problem. And so trimming that cost will bring that PE down. Just look at the book value of Salesforce at 59. I don't think that's a horrible book value. Up year to date, 48%. Their average price target is 221. I think anything under 200, you got 10% in the bag if you hit that price target. I think they're doing enough that they staved off the hostile bids. So I think sales. In my mind, I think if it gets over 200 and you've gained more than 20% and you don't have tax implications, do it, Eric. I think it's you're 1% below your 52-week high of 200. But I do think for people who are starting positions for long term, I don't think anything under 200 is a horrible price. Just size in correctly. Let me look real quick. I can look at my iMovie. Okay. It looks like it's export file. 1080p. Yeah, I'm just going to do 1080p. Why not? Next. 5.2 pod. Save. Boom. Let's see how long it's going to take to export out of iMovie. Let me see. I've still got, wow, 28 minutes left on exporting that? Huh. That's crazy. Let's see. Waiting on exporting the movie. Waiting. Okay, where's my OBS? There we go. Let me look at PXD. I think PXD covers that gap as well. I'm not adding to it. I haven't added to it. I also didn't sell it because I'm holding it long term. But I do think that 208. I bought it at this gap down here. I think it was right before the ex-dividend date. Yeah. I bought here on March 3rd, right before the ex-dividend date at about, I think 208 was the average price. So I'm still up. Plus I got that dividend and their next dividend should be good. Look at here. LXEH. It is one of the most actives in Fidelity. It's up 164%. Whew. Oh, that's crazy. Okay, I'm going to be right back. Oh, boom. Okay, let me see. Okay, let me see. Make sure my AirPods aren't clicking. Okay. If my AirPods start clicking, let me know. Ping it. Yo, Britney, bitch. Let's see. I'm averaging 200 on Fidelity, and we're both going to sit back. Yeah, take that nice dividend. I mean, Christian, it's one thing to think that PXD, in my mind, PXD is your safest bet at about 200. I don't think it's going far below 200. If it does, somebody's buying that shit. And second off, you got a huge dividend, and that is at energy prices that are today. If as energy prices go up over the summer and stuff, God, imagine that. LXEH, it's a pop. I mean, it's a hype pop. Um, I LXEH. Let's look. Bum bum boom. They're an education and training service. There's no news on them. They're being delisted supposedly. That's the last news article from September 23rd. You're 251% below your 52-week high of $4.93. 143% up. So, Brian, what I would do on this one, I just looked at Finviz, and here's what I see on this one. I think on the 5-minute chart, I typically look at this green line, which is a 9-day EMA. If it's above that and it closes above that, I think it's got confirmation. But this one you're going to have tight stop losses on, because yesterday it closed at 60 cents and it's up at $1.75. There's something going on. I mean, the volume is just way higher than it was anywhere yesterday. Look at the 5-day. This is a 5-day, 5-minute chart. Each candle represents 5 minutes. And look at the stock price there where it popped to $1. And that was yesterday. And there wasn't a huge volume other than that. And that was at 2 p.m. I'm sorry, 2:05. 2:05 it popped up there. But it quickly went back down to 60 cents. I mean, you lost 50% if you just held it for 5 minutes. And that was the pop. Then all of a sudden you've got this volume in pre-market, which ran it up from 90 cents all the way up to $2.69. Do I think it's going to go up? I think it's got the hype train around it. But God, I would be a much richer man if I knew it was going up. It ain't worth the price that it's at today. ATVI, let me go back to long term here. Safari. I think anything around, here's the thing. Activision Blizzard, the deal is essentially dead. It will not, absolutely 100% not go through. And I think you're going to see Microsoft just completely back out. $3 billion breakup fee, they're going to pay that. I think it brings to light. Wow, PacWest is way down. Wow. All of the regional banks are under like, whew, they're down like 20% and stuff. It's an interesting play, but Activision Blizzard, I think, brings up a great example of two companies that are based here in America that want to merge, and one company wants to be bought because of actual leverage in that industry, and it's being blocked by a foreign government. It's not being blocked here in the U.S., although if it were to get to the point, I think the current administration would say, yeah, we're going to block it too. It's an interesting option that they have to back out at $3 billion. $3 billion means nothing to Microsoft. I mean, let's just look. And it was an all-stock deal. So I think they could pay the $3 billion in stock. Their market cap is $2 trillion. What's $3 billion? It's a rounding error. They make $69 billion in the last quarter. So it means nothing to them. But if you take your eye off of AI, off of other stuff like you did back in the 2000s, Microsoft has learned from this, and hopefully Satya is smart enough. Yeah, Christian, I think I hate conspiracy theories, but the conspiracy theory I read is that the Biden administration didn't want to seem anti-business and take on a Microsoft again as a government. Because remember, they took them on back in the 2000s, and it dragged Microsoft through a hellish, 15 years of stock price and lack of growth and lack of innovation because they were more worried about antitrust stuff. So I tend to believe the writers who say that the Biden administration might have reached out to the European Union and said, hey, we're going to fight Google. You guys fight Microsoft. I don't know. PBST. Let me look at PBST or PBTS. Hasn't popped. I mean, does that stock chart induce some confidence? Then they're going to get delisted as of April 28th. Let me see it in the algorithm. You have the, Brandon, you have TrendSpider, so I know you have both algorithms. But here, I would run from this one unless you know something. And the reason I would run from it is because even the algorithm loses you 86% over 2 years, and buying and holding the stock loses you 95%. Now, the 65-minute algorithm on this one, over 8 months, you still lose 69% versus 95% over 8 months. You've got some wins here. I mean, that's playing something for a short squeeze. You should buy it when it's in the short squeeze, not because it's going to be a short squeeze. Traditionally, you can't pick out which ones will wind up being there. Yeah, Christian. I mean, I wouldn't, and listen, I don't think it's Biden himself. I mean, a lot of people want to, Joe Biden is a good, loving Christian man. I believe he does things based on what he thinks is in the best interest of the mass majority. I don't think that he makes smart decisions sometimes, but I do think that he believes in the decisions that he makes. And when I say he believes in the decisions that he makes, I don't think he's all for every policy that he's rolled out there. I think it's just he's been a politician for so long that he knows what will work and what won't. And he knows what he can get through in the House and the Senate and what he can't. And DPST, by the way, is at $5. DPST, along with all the regional banks, has just crashed. I'm going to bring you back over to Active Trader Pro. Look at that. I mean, just with the open, and now I'm going to edit something together. Okay, 1, 2, 3. There we go. Where's my GarageBand? There we go. Oh boy. Don't use. Why is this not opening? Loading. There we go. We're going to delete that. Going to bring that down there. We're going to put this in. Converting. 1, 2. And 3. And then we're going to zoom in. We're going to move this. Okay. Boom, boom, boom. Come on. Move over. There we go. Okay. Boom, boom. Then we're going to export song to disk. Export. And MP4. Where's my iMovie? $6 and 22 minutes. You got to be fucking kidding me. Sorry. Oh, yeah, the Blue Yeti is up in New Jersey. I fly Frontier, so I can't fly it back with me because your boy isn't paying, what, $60 for a carry-on bag? I might as well buy a new Blue Yeti for it down here. Boy, and this. It's a Blue Yeti is what it's called. It's a cool microphone. And I do look better with the microphone because I look way more official. I know. I do have to do. I mean, that's what the Fire podcast was supposed to be, Brandon. I just got bored with doing it. And it's not that I got bored doing it. It's that I'm watching DPST. It's that even coming up with topics. See, doing this once a day, Monday through Friday, um, two turntables. One in my back, two turntables and a microphone. But even doing this one once a day um, is it's a lot of work. I mean, shit, I'm already 2 hours in. It takes about 3, 4 hours a day to do this one. And then by the weekend, I'm like, why do I want to spend 2 or 3 hours doing another podcast? Even though I just wing it. I mean, honest to God, I just wing it. So, um, converting to MP3. Two turntables and a microphone. It's got to be May. Once I get the audio file, I'm going to hang this up, go and do it. By the way, if you haven't subscribed yet, I know there's 12 people in here, but if you haven't subscribed yet, be sure to subscribe. Hit that thumbs up button. It does help. I've noticed that the thumbs up have gone down, and therefore the subscribers haven't been growing as much. I was growing at about 100 a week on YouTube, but and yeah, Brendan, I was doing the fire once a week, but I do need to do it because I do live cheap. It's funny because my oh, don't use we're in a quick garage band. Save. Let me just make sure. Hopefully this one works. Let me see. Okay. I still have some some nightmarish audio, but it was good content, so you can deal with the nightmarish audio. I'll upload the video later. Because your boy's going to go for a long walk today. I need some podcast and me time. I haven't had a lot of me time of late. We're going to do Peacoat because I like Peacoat. We're going to insert an ad. I'll open up my notes. Wow, DPST, man. Is there an opposite of DPST? Let me see. Um, um, DPST distributions. Sequity, there it is. biotech, technology, utilities, healthcare, just FAZ. Just FAZ. Wow. Look at FAZ. Hoofa. But DPST is just killed. Absolutely killed. FAZ has all the confirmation in the world, but I mean, it's just run so much. Look at the volume. Look at that volume compared to all day yesterday. People are just pouring into that one. They're trading it. Where's my iMovie? Who's texting me? Oh. That's funny. Anybody see Jared Leto dressed as a cat at the Met Gallery? What's TZA? My computer is just so resource strapped right now. Damn, look at TZA. Small cap bears. God, the market has just taken a slam down. Pac West and Western Alliance. Hopefully people got out of Pac West. Because I know I brought that one up as a earnings one last week. PACW is I mean, when they announced that they had good deposits. Here. So if you're listening to the algorithm, Pac West here, you would have gotten out with an 18% loss, but it would have gotten you out on May 1st, yesterday in the morning, with an 18% loss before you wind up losing 30% and getting halted a bunch of times today. Now, here's the question. Is Pac West management as dumb as First Republic? They have a bank run going on. And there are a couple of ways to get out of, bank runs. Refusing to hold an earnings call and telling people not to worry is not the way to get out of a bank run. Okay, and I've got to get to yeah, everything bearish is overbought and everything bullish is oversold right now, as far as what I see. Okay, we're going to put that in. Go up top. Market update 3/5/2/23. Okay. Publish now. That is done. Let me go back. I am going to move to trash, move to trash, move to trash. 5-2 pod. We're going to move this to trash. 1, 2, 3. Move 1, 2, 3. And I'm going to look at, okay, QuickTime Player, QuickTime Player. There we go. Software update, I need to check. There I am there. Okay. We're on Pack W. Okay, I am going to the video portion of the podcast, which will be up later, is going to take 2 hours to actually write through. So it is an hour long. So what I'm going to do is, it is now 10:51. Your boy is going to go for a walk. I will post the video. The podcast is up. The podcast it's an hour and 5 minutes. It is up there. Okay. And let's see. Okay. I am out, guys. I will be back tomorrow. The video will be up later of the podcast. I'm going to go for a walk. Let me know if you have any questions. Pack W, I wouldn't touch it unless here's the thing. I mean, this is just like FRC. The one I would trade, DPSD, is going to get some confirmation. Top, this one goes over 60. I think you could probably play this one. It got to 68. It's up 10%. I still think that's a short squeeze. This one's done. You can see that one's just finished. You VIXy, up 14%. The VIX is up 20%. Volatility is flying. So you're going to see a pretty big move down today. Oof. Devon Energy experienced a spike. Where's Devon Energy? Ooh, look at that. Energy's taking a hit. Wow. What the hell happened to Devon? Did Devon have earnings today? I don't think so. Did I miss it? No, they got earnings May 8th. Wow, I'm losing a bunch today, by the way. Okay, I am out. You guys have